Sustainable finance is the practice of financing projects that are environmentally, socially, and economically sustainable. This type of financing is a growing area of the financial world. The key to understanding and working with sustainable finance is knowing what it isn't. As the above definition suggests, sustainable finance doesn't mean that your project can't be profitable or that you must sacrifice other goals for success. It simply means that you need to think through all aspects of your business plan before asking for money from potential investors or lenders. At its core, sustainable finance amounts to ensuring that any loans or investments you make in return for capital are aligned with your company's long-term financial interests, both now and in the future. What is sustainable finance? The term sustainable finance can be a bit confusing, but it is essentially just an umbrella term for financial practices that don't cause environmental harm or social harm. You can use sustainable finance to ensure your project is environmentally and socially responsible by thinking about the sustainability of your project. For instance, if you are building a factory in a remote area, you could consider how the workers in that region will fare as a result of your factory. You might also want to think about how much energy the factory will use and whether or not the emissions from the factory are going to impact local water quality. On an economic level, sustainable finance can be as simple as ensuring that profits made through your company's projects aren't going to run out quickly or that money isn't being wasted on unnecessary costs. In other words, it simply means making sure you are doing what is best for the business in both facets of sustainable finance. How does sustainable finance work? The best part about sustainable finance is that it's a relatively straightforward concept. Here are the steps you should take to implement sustainable finance in your business. Create a business plan that includes both short and long-term goals. Consider what will happen if you make a loan or invest in a project. Are those projects aligned with your company's financial interests? Seek out investors who have an interest in your company's long-term success. Types of sustainable finance. Sustainable finance can be broken down into two main types. In the first type of sustainable finance, a company takes on less debt and invests more in their own projects. This is often called investing in yourself, which means that your company uses its cash reserves to pay for improvements and expansion. The second type of sustainable finance is a form of publicly traded securities. This type of sustainable finance has a high degree of risk but provides rewards if things go well, as investors are rewarded with dividends or interest payments when the financial project pays off. In order to make a business plan successful and sustainable, you have to think about all aspects of your company's future finances before beginning the process, not just those aspects that will provide short-term gains. It's important to understand that while this sort of financing may not provide immediate profits, it can lead to long-term success if followed properly. Advantages of sustainable finance. Helps to ensure that any loans or investments you make in return for capital are aligned with your company's long-term financial interests, both now and in the future. The key to understanding and working with sustainable finance is knowing what it isn't. Disadvantages of sustainable finance. A major disadvantage of sustainable finance is that returns on investments are lower than normal. This could mean high interest rates from banks and investors, or it could also lead to low interest rates in the wake of a recession. Another drawback of sustainable finance is that it takes time for projects to be implemented. This can slow down growth and make it more difficult to take advantage of new opportunities. In general, the biggest disadvantage of sustainable finance is a lack of capital, one reason why many companies stay away from the practice altogether. Conclusion. If your business is looking to make a sustainable impact on the world, you should consider implementing a sustainable finance strategy.